All right, let's get right into it. You know, every now and then, a stock does something that just makes you stop and go, whoa. Today, we're going to break down the technical report on one of those stocks, WGRX, to see what the story really is behind this absolutely wild one-day performance. Just look at that number, 185%. And no, that's not a typo. That is how much a company called Wellgistics Health saw its stock just explode in a single day of trading. That's a huge, headline-grabbing number. But what's really going on under the hood? And that is the big question, right? Because when you see a move this massive, the data almost always tells two completely different stories at the same time. One is a story of just raw power, and the other one whispers, hey, maybe this thing's about to run out of gas. We're going to look at both sides. So first up, let's just take a second to look at the sheer force of this surge. I mean, the numbers here are, well, they're pretty wild. So check this out. The stock went from about 40 cents all the way to $1.15. We're talking about it basically tripling in value in a single day, and that pushed it right up near its 52-week high. Just incredible. Okay, now look at the volume. This is where it gets insane. On a normal day, maybe 15 million shares get traded, but on this day, almost 725 million. Do the math. That is nearly 15 times the average. This wasn't a slow creep up. This was an absolute stampede of buyers. So, what caused that stampede? Well, let's dig into the technical signals, because the report really lays out a super strong case for why the market got so excited so incredibly fast. All right, before we jump in, a quick refresher on moving averages. Just think of them as a way to smooth out all the daily price noise. They show you the stock's average price over a certain period, say 5 days or 50 days. They are super helpful for spotting the real trend. So you can see right here, that price, $1.15, is just soaring above all those key short and medium-term averages. For a trader, this is a huge green flag. It's not just a little pop. It's a powerful breakout from its old patterns, pointing straight up. And this is a really big deal. So Bollinger Bands, they kind of create a normal trading range for a stock, an upper and a lower boundary where it usually lives. Well, WGRX didn't just tap on that upper boundary. It completely smashed right through it. That tells you this is an extreme move. It's breaking all the rules of its usual behavior. And it doesn't stop there. The report points out that other key indicators are all flashing green too. You've got a bullish crossover on the MACD, which is all about momentum. The ADX is a reading super high, confirming the trend is seriously strong. And of course, that insane volume we talked about, that's just pouring gasoline on the fire. It shows there's real conviction behind this move. All right, so the case for being bullish, it looks rock solid. But, and this is a big but, this is where things get tricky. A rocket ship that goes up this fast, well, it almost always sets off some warning alarms. So now let's flip the script and look at the other side of this, the data that's basically screaming, whoa, hold on, maybe this rally got a little ahead of itself. And to do that, we have to talk about the RSI, the Relative Strength Index. The easiest way to think about it is like a fuel gauge for a stock's momentum. It's a scale from 0 to 100, and anytime it climbs above 70, that's a warning light. It's telling you the stock might be overbought. And take a look at where WGRX is sitting. Its RSI is at 64.75. So, okay, it's not technically in that red zone just yet, but it is right there banging on the door. What that's telling traders is, yeah, the momentum's awesome, but it's getting dangerously close to a point where, historically, it just can't keep it up. And while that main RSI is just getting close, some other, more sensitive indicators are already past that point. They're screaming overbought. The Stochc RSI is at 100. It's literally maxed out. The CCI is way up at 210, which is extremely high. And the Money Flow Index? Almost 98. All of these are basically waving red flags, signaling that this engine might be about to stall. Which, of course, brings us to volatility. A huge swing like this means crazy high volatility. The report pegs it at almost 16%. And here's the thing you always have to remember. Volatility is a double-edged sword. It's the very thing that gave us this incredible ride up, but it can just as easily create a terrifying ride down. The risk here is just as massive as the potential reward. So what we have here is a classic showdown. On one side, you've got this incredible, powerful, bullish momentum. And on the other, you have all these flashing red lights saying it's overbought. So how does the report make sense of all this conflicting info? You know, this summary from the report really paints the whole picture perfectly. It lays it all out. You've got all the good stuff, the huge gain, the price blasting past its averages, that insane volume. And then, right there are the warnings, the maxed out indicators and the sky-high volatility. It's the entire tug-of-war in a single snapshot. So what's the takeaway? Well, it really all comes down to a couple of key price levels. The bullish story stays alive as long as the stock holds above 86 cents. If it can do that, the next target is up around $1.45. But, and it's a big but, if it drops below that 86-cent floor, the bears could take over and we could see a serious pullback. So the strategy suggested is pretty interesting. If you're a short-term trader, maybe think about taking some profits off the table. If you're in it for longer, you'll want to watch closely and see if the price can find its footing and consolidate. And so that leaves us with the million-dollar question, doesn't it? Was this 185% explosion a show of pure strength that's just getting started? Or was it the grand finale, the last big firework before the show's over? The data gives us arguments for both sides. The only thing that's going to give us the real answer is what the chart does next.